Hello, good day everyone. Gab here, market analyst from SmarTrade. So it's good to be back this YouTube channel. So as usual, let's have a quick market recap on yesterday's data. So last night we only have two high impact news. So in particular, we have the inflation rate. So Germany last night 8 p.m. So the actual data was 7.9%. Versus the market forecast at 8%. And followed by the JOLTS job openings sa US. So the actual data last night was 11.239 M versus the market forecast of 10.5 M. So obviously this one is higher comparing on the market forecast and also the previous one. And that is why this data created a volatility from the market right after the release. So for today, we have to focus on a lot of data. So we can expect that today it will create a lot of volatility from the market. So first things, we have the employment data for Germany. So later at 3:55 p.m. So we have unemployment change and of course the employment rate for the month of August, followed by the inflation rate. So European zone later at 5 p.m. So after the inflation rate, we also have the ADP. The employment data for the private sector sa US later at 8:15 p.m. And also we have the GDP data for Canada around 8:30 p.m. And then lastly, we have to focus on the crude oil stock exchange inventory for this week later at 10:30 p.m. So let us focus more on some of the financial products for today. So first one is gold. So for the past couple of sessions, actually gold is obviously on the bearish side. So if we're paying attention on the bigger picture, for monthly time frame, it's obviously strongly bearish since the price is currently below our 2 moving average here. And also the weekly time frame is also bearish. Same goes with daily. So right here, as of the moment, the current price of gold is around 1723.19 per ounce. And it looks like, based on the market structure, the price of gold is currently at a strong support level, which is somewhere around 1720. Okay. However, we have to pay attention sa price ng gold for today since it's obviously bearish. So for those traders that if you want to focus more on the long-term or long position side of trading, then I would recommend you to wait for the price to go beyond 1735. Right here. So if the price goes up beyond 1735, then it will pave the way to 1740. That's the ideal target for gold today, just in case the price trades beyond 1735. But if you want to place your positions more on the selling side, then I would recommend you to at least enter your position lower than 1720. If the price trades below 1720, then based on the market structure, it looks like the gold will go down further for today. And of course, possible targets will be around 1715. Right here. Now, if the price of gold goes down lower than 1715, if the price can sustain the lower than 1715, then it will try to pave the way below 1710, next possible target. And of course, 1705 and 1700 levels. But personal opinion, even though the price of gold might test the 1700 levels, I don't see it to drop further below that, since 1700 is actually a strong support level, so it may try to bounce from there. But again, for today, the levels that you have to pay attention for gold, if you're aiming for long positions, then you need to wait for the price to go traded beyond 1735 with possible targets around 1740. But for the main objective for today, if you're aiming for selling position, you need to wait for the price of gold to be traded below 1720 with possible targets of 1715. And again, if the price goes below 1715, then it will paved the way to 1710, 1705, and of course 1700 respectively. And lastly, for oil, so oil was actually down last night. So from 97 per barrel goes down to 90.49, as low as 90.49 last night. But right here on the 1 hour chart, this is actually a textbook market structure, since we can see an impulsive move right here and followed by correction. So if you can see this this kind of market structure, then possibility that the market will go down further. But what are the price levels that we have to pay attention with crude oil for today? Same thing with the 4 hour chart. This one is a textbook structure as well. This one is an impulsive move followed by corrective waves. So on the 4 hour chart, it's obviously, we can see that the faster EMA cross the slower EMA, so it means possibility it will go down further. But if you're aiming for buying position for this one, then I would recommend you to wait for the price to go above 94 levels. So 94 per barrel level is actually a very critical resistance, since the market price of oil reacted at this range. So nung time na tinamaan niya, no, you can see a sharp decline for crude oil. So if you're expecting to the price of oil to retrace at 94, we have to be very cautious, because in my personal opinion, if the price retrace above 94, then we can see a strong decline once again. But if the price of oil is traded above 94, then it will try to pave the way towards 295 and possible to 80 level. But for today, I will be closely monitoring for the price of oil, which is somewhere around this area. 91.5 territory. So if you're aiming for selling position, I would recommend you to try to test the 91.5. If it's trading below lower than 91.5, then try to target at least 90 per barrel right here. So 91.5, target is 90. It's traded below 91.5. So if the price can sustain below 90, then it may try to target 85 and of course 80 per barrel. But again, for today, the levels that we have to focus more is 94 per barrel. So again, if you're aiming for long positions, you may try to set your buy positions if it's higher 94 and possible targets around 95. But the 91.5 is the price that I will closely monitor. Again, if it's traded below 91.5, possible targets at 90, and it can sustain lower than 90, possible targets is 85, and of course 80 per barrel. All right, so that is all for our briefing for today. So if you have any questions, you may drop your questions to our Facebook page at SmarTrade PH. And for more contents, please like and subscribe to our YouTube channel SmarTrade, and see you on the next video.